this gig economy is driving over 100 billion shillings worth of economic impact. It's also a youth employment engine. As mentioned, my driver this morning from Bolt was actually a university student who's also essentially part of the gig economy because he uses his mornings to drop people. And we see that over 150,000 jobs are actually operating in this space.
We are glad to say, and maybe to announce here, that our top 20% of drivers earn an average of 183,000 per month. So what does that number mean? It means they're earning at least 3x of average salary in Kenya. They're earning very close to 6x of minimum wage in Kenya. And our single highest driver earns 400,000 a month.
The element of flexibility, right? Different types of people are participating in this economy for different reasons, for different objectives. And many of them, their livelihoods are fundamentally linked to the gig economy.
You unpack those numbers, there's a 98% about them increasing their standard of living. That is a very impressive number. I mean, if you consider the conversations that are ongoing, sometimes this data is pointing to a very positive impact to it.
The gig economy gives people dignity, gives you a soft landing to say, hey, let me try this thing because I have a standard of living I need to maintain. And as I'm waiting for the next thing, let me do this. And then you find out that you can earn 400K. What do you think happens?
So good morning, everyone. My name is Kemibaro. I'm the founder and CEO of Dotsavvy, and it's a pleasure to be moderating today's media panel and the launch
of Bolt's new Gig Economy Kenya report, developed in partnership with Ipsos. This landmark study reveals critical insights in Kenya's gig economy, where over 150,000 digital platform participants across ride-hailing, delivery, and on-demand services contribute more than 100 billion Kenyan shillings annually to urban economies, with 78% citing flexibility as their primary reason for joining these platforms. Over the next 40 minutes, we'll unpack the data. We'll also look at gig economy realities and policy pathways to ensure gig work delivers on its promise. So I'll start off by, first of all, introducing our panel with to my immediate left, Dimmy Kanyankole, the Senior General Manager for East Africa at Bolt. Dimmy leads Bolt's operations across East Africa, overseeing strategy, growth, and marketplace health across multiple cities and verticals. He has a deep expertise scaling mobility platforms and brings front-row insights into how the gig economy Kenya reports findings shape Bolt's drivers and courier support strategies. We also have with us Kenneth Anye, the Director of Public Policy for Africa and International Markets at Bolt. He leads Bolt's policy and regulatory engagement across Africa and international markets. He's also shaping conversations with governments and policies shaping ride-hailing's growth and digital inclusion. His work directly addresses the report's calls for evidence-based policy frameworks. And lastly, Mbugua Njihia, a venture builder and a solution architect. He's a serial entrepreneur and venture builder who's launched multiple African technology platforms. He has broad perspectives on the digital economy trends, connects the report's metrics to the strategic decisions needed for sustainable platform ecosystems across Kenya and East Africa. And I'd like to first of all start off with just sort of decoding the data that has been shared very kindly by Witness Suyinka, where we look at the report saying that the platform work generates about 100 billion Kenyan shillings, which loosely translates to just a shade under $1 billion annually, but with 62% income volatility. And what does this mean in practice? And I'd like to start off with you, Dimmy. The report notes that Bolt drivers average around Kenya shillings 63,000 gross monthly income, but with high variance. What surprised you most about these earning patterns, and how is Bolt responding?
Thanks very much, Moses. Number one, we are happy that at least now the Ipsos report also reflected the same driver earnings that we have on our data, very close to that. So it's true, our Bolt drivers today are earning at least an average of 63,000 gross earnings per month. Of course, as you mentioned, with the different variants. So what does that mean? It means 63 is the average. There are drivers who are earning quite more. There are drivers who are earning quite less, depending on how they use. So today we have different drivers cohorts. We have what we call primary drivers. We have what we call secondary. We have what we call part-time drivers. But also we have different categories. We have four-wheelers categories divided in multiple categories. It could be basic, comfort, XL. but also have the two-wheelers, which is also either the normal IC bikes or electric. So all of these drivers earn differently. But we are glad to say, and maybe to announce here, that our top 20% of drivers earn an average of 183,000 per month. So what does that number mean? It means they're earning at least 3x of average salary in Kenya. They're earning very close to 6x of minimum wage in Kenya. And our single highest driver earns 400,000 a month. Thank you. 400,000 Kenya shillings a month, our single highest earner. So probably some of us, or some of my team members can decide to even work at road as drivers, right? Yeah.
Sorry, just say that again. 400,000 a month
Yes.
gross income.
Yes.
That is impressive. I never would have imagined that kind of number, but that's literally a very senior professional salary in most corporate businesses. Yes. Wow, fantastic. To you, Kenneth, with 53% of participants citing ride-hailing as their primary source of income, and 98% of them reporting that this is improving their livelihoods, what policy signals should regulators prioritize from this data?
Thanks so much. Good morning. Thanks everyone for being here. When the report came in and we looked at the numbers, the 53%, it was very telling because ride-hailing has always been thought of as a stopgap. You just doing it as a side hustle kind of a concept. But what that is telling us is it is the economy. 53% rely on it, and that is where they're making their livelihoods. And if you, as Mr. Shenka explained further, if you unpack those numbers, there's a 98% about them increasing their standard of living. That is a very impressive number. I mean, if you consider the conversations that are ongoing, sometimes this data is pointing to a very positive impact to it. And what does that mean? It means from if you analyze that data of 53%, it's telling you that 53% are saying they're committed to the service. And that commitment comes with value that it creates for them. So from a policy angle, our conversation with policymakers is, how do we enhance that? How do we enhance that commitment, not stifle it? I think that's the key for us when we engage with policymakers. Regulations and policy have to promote that. They have to reinforce the platforms that are creating this value. So I know we have single issue conversations that are ongoing, but from that, when we frame it around that concept of enhancing that flexibility which you have talked about, it creates a lot of value. And that is the angle where we will build. We're looking at working with governments to build on that and leverage it moving forward.
And I think ultimately what we're seeing, Kenneth, is that the behavior is there, the lifestyle is already in place. We know that government often struggles to create new jobs. So this is really something that they should be ideally propping up and supporting more than anything, correct?
Yeah, it shouldn't be, I think, policy formulation should not stifle it. It should, we have seen across where when policy comes in and regulations come in and they stifle the sector, it strains the sector. So we should be looking at how do we, I think 53% saying is yes, they're earning the main primary source of income. If we grow that, it's a sign of commitment. It means people are leveraging this. And it says a lot about Kenya, the Kenyan economy, and the advancements. I think it was pointed out in the beginning, right? That all of this is not happening in an ecosystem, void of elements. This is happening because there are certain elements that have been put in place. What my colleague Dimmy talked about. Financing opportunity, earning opportunity. All of this makes the sector attractive, and that's what we want to preserve.
Fantastic. But to come to you, Mbugua. Looking at Kenya's broader digital economy trends, of which you're very familiar, do the report's retention metrics, which state that 52% stay over 12 months, signal a maturing market, or do volatility figures raise deeper structural concerns regarding the sector?
Thank you, Karibuni. I think I'll start with the volatility side and see what the gig economy actually unlocked. You alluded to it earlier by saying some people look at it as a stopgap measure. You know, Moses, you said your Bolt driver this morning was a campus student who's got classes in the afternoon. I do expect that that student, once, if he's doing medicine or if he's doing law, whatever he's doing, once he's done studying, he's probably going to transition. So that volatility is expected, but at the same time, we will find that people have also stumbled into it. I still think we are suffering from the vestiges of something like COVID. Not everyone has recovered, and the gig economy gives people dignity, gives you a soft landing to say, hey, let me try this thing because I have a standard of living I need to maintain. And as I'm waiting for the next thing, let me do this. And then you find out that you can earn 400K. What do you think happens? If you're earning 400K, you're in that upper quartile, you'll settle in and you find your home in this space and you make it work for you. You figure out, if I'm to make 400K, what do I need to do? Upskill yourself in terms of now being a business person in the case that you're an exec. And I think we'll see this number grow as the gig economy starts anchoring more primary incomes. You know, and I think later we can talk about how, you know, what are those benefits? Because if this guy, for example, is earning his 400K, and like you said, there's great variance from the 63 all the way up. What's the key thing that's keeping people there? And yeah, so that in this market, it's maturing, and actually think we'll see that number go higher and higher. We are coming to a very interesting time in the country. Next year is an election year. Businesses tend to shrink or to cut back and whatnot. So we'll see a lot more people saying, you know what, in the run-up, maybe I'll try this gig economy thing. And I dare say, I think many people will find their home there, and then that number will jump up to 60, 70. Who knows? Maybe the gig country of the world.
Again, we're almost at $1 billion here, as the numbers suggest, just for Kenya. And I think what we're seeing, which is quite consistent with the marketplace, is that people now have this scenario where, I think historically we called it the side hustle. Now it seems to me that this could be the main hustle, in the sense that not only can you have your daily job, but this could potentially be earning even more money than what is essentially your full-time position. So I think, as you pointed out, it's not really a side thing, it's becoming the main thing in many instances.
And maybe, Moses, also if you look at the spread, because we talked about e-commerce and then ride-hailing and then a whole set of others. Many people in this room are in this gig economy. Because if you're in the side hustle and if you're selling sneakers and you're running an e-com shop on different social media platforms, you are part of this collective that is generating the 100 billion shillings a year.
Absolutely. So I'd like to come to essentially the digital platform participants who basically value the flexibility that this gives them, with 78% of them seeing it as their primary motivation. But also, in some instances, they've flagged concerns around safety, up to 55%. So if we come to these income gaps and how we can bridge them, I'd like to ask you, Dimmy, what sort of safety investments is Bolt accelerating? And I know you have emergency buttons, you have route optimization, community support. What other implications or considerations do you have around safety at Bolt?
Okay, thanks very much, Moses. So maybe to start with safety. So I understand people when they say safety, especially on the street, either they want to compare with offline, right? So from the search itself, it says ride-hailing is much safer than offline, right? So let's make that clear. Then when we come to ride-hailing, now go to Bolt, what are the things we have invested heavily in safety? So as I mentioned earlier, we have emergency button. So what does that mean? Whenever you're on the trip, you can now, just a click of a button, somebody will call you to really understand what's the issue. And in case you need medical evacuation, you want to go to the hospital in case of accident, or it's a security concern, you need evacuation, some serious security company will dispatch some security personnel to just come for the rescue. So as I mentioned, we are doing this for the community, we are doing this for the drivers, we are doing this for passengers. But what we have seen, even some of the guys who are not on Bolt application, they reached out to Bolt SOS button when they got in some issues. Then we have invested in what we call trip anomaly. So trip anomalies, we monitor your trip movement. So let's say you are moving from point A to B and your trip was meant to be 30 minutes, but for some reason your car seems to have stopped somewhere for quite some time. So our safety team reach out to both passenger and driver to understand what's the issue. And in case of any support, they'll provide support. But we also have what we call trip share. So trip share is available for all the passengers who are using both the application. So you can share with your loved ones so everyone can track your trip movement. So think about if you're coming out of the party and it's close to midnight or past midnight, your phone is about to die, so you can share that trip. So even if your phone dies, at least somebody can know your whereabouts. Then in terms of the overall platform safety, we vet and verify all the drivers that we have on our platform, same to the vehicles. So in terms of drivers, not only verification to understand who is this Dimmy, what is the ID and whatever, but we even go further steps to ensure this Dimmy even has a good certificate of good conduct, has all the PSV insurance, and has the right to be on the Bolt platform. So that is to ensure at least the driver is safe, but the passenger who now boards this driver is safe throughout the journey. So we have a lot of safety plans, and as you know, very close to 12% of our workforce is in safety. So that tells you how the company is really interested and invested in safety platforms.
Wow, that's very impressive. I mean, the different layers or measures you've taken to ensure safety within the Bolt platform, I think is impressive. And you're saying up to 12% of your workforce is just in safety.
Yes.
Incredible. I'd like to come back to you, Kenneth. How do you feel platforms and regulators should collaborate to ensure that 78% flexibility that has been mentioned in the report, and that these platform participants can see this value that they get out of this flexibility to be sustained and even extended beyond where it is today?
Yeah, I think, in conversations, and I must comment that there's been a lot of progress in Kenya, and Kenya's made a lot of progress in creating an enabling environment for that from a regulatory. I mean, the journey began, we're still on the way. There's a lot of work to be done, right? And as I mentioned before, the focus should be on strengthening the platforms. And when I mean strengthening the environment where the platforms operate, right? It shouldn't be detrimental. It shouldn't be blocking that commitment of the drivers who have said, as we've seen in the numbers, 53% say this is their primary source of income. 98% say their standard of living has improved, with 54% indicating that it's a massive improvement, right? So all of this is the signaling there to us, the players in the market, including the policymakers, is that how do we protect that and how do we grow that? And that is creating regulations which enhance that, And I think one of the areas where we are looking and working with the government on is we don't want it to be a single issue, variable inputs, because as we talked about it, what the driver takes home has different elements that contribute to that take home. There is what they're paying for. There's fuel, as we know what is happening globally now with the current situation in the Middle East. Pricing is going to go up of fuel. There's issue about car ownership, where the drivers are, and we are trying to, as Dimmy is working tirelessly with his team to try and unlock and solve those challenges, but we cannot do it alone. We need to work with the policy and look at it holistically, a comprehensive framework which tackles all of these challenges that they're facing. And just to reiterate that point, it shouldn't be a single, and I know when we talk about single, I mean, there will be conversations about pricing, of conversations about commission, about all of that. But that should not be a single issue. We should look at it holistically, and with that partnership, we can address and help and continue to get that feedback from drivers that we want to stay in this, we want this as a source of income, we're happy with the standard of living improvements, and we want more. I think that holistic approach is what we're looking for in relationship with the policymakers and other stakeholders in the space.
Absolutely. It almost reminds me of the way mobile money took off in Kenya, where with light regulation, a light touch, it was able to flourish. And I believe that is the sort of framework that we need also around the gig economy going forward. I'd like to come back to you, Mbugua. And again, given your perspectives across the entire ecosystem when it comes to the digital economy across Kenya and East Africa, what levers, meaning algorithm transparency, savings tools, insurance bundles, can reduce the 62% income volatility without killing the flexibility of the gig economy value to those participants?
That's a great question. And the straightforward answer is value-added services. We already know that solutions like Bundle Ya Dere, like anything that can add to the bottom line is welcome. And when you look at the sheer size of the potential market, not even of the actual market, maybe Dimmy, what's the number of people like on the board side? Is it 152,000, or is the statistic is 152K for Kenya? That's a massive market. If you look at what they're consuming, whether it's in terms of fuel, whether it's in terms of data bundles, and there's a whole thought around how do you drive value-added services in that way. A key point that sometimes we miss is also the financial rails element of it. Many people, and it's on the report, many participants in the gig economy default to mobile money. The unfortunate thing about mobile money is that it doesn't quite tell your story to a financial provider, to an upline financial provider in the way that it should. So you could imagine if more of these gig participants actually maybe settled to banks. Banks are more equipped to now give a layer of, value-added services. Think of it this way. It's highly unlikely for you to walk to a bank and say, can I just give you my M-Pesa statement? There's a whole other economy that's been created by the ability to analyze, say, mobile money. But if that money settled directly to a bank, almost automatically, it's like your salo. Suddenly the bank has visibility and can give you a loan, can then start sorting out the issue of vehicle ownership, even outside of the more formalized products. You could get access to, for you to participate in the gig economy, you have to be digital. And dotted line to things like airtime and data. And if that's the unit, if that's the universe that you're looking at, what does it take for me to remain always on, cheaper? So these are the things that, percentage-wise, I give you, there's a 5% benefit you get maybe on your airtime or data that goes to the bottom line. You give me the fueling thing is there. We talk about the issue happening in the Middle East. Yet we know Kenya, we are, I think, at 93% geo in terms of energy. Think of it this way. If government made it their thing to actually participate in this sector in a stronger way, and you're seeing a big drive to EV adoption, it stops being an issue. Like, oh, no fuel, no problem. We've got Olkaria, and the rains are here. Today's going to rain, the Met guy said. We've got power, and we'll get you to where you need to be. So all these things come together to then say, yes, it's going to be income volatility, but we're making all effort to cushion that by reducing your cost of operation, and by and large, that when that goes to the bottom line, the participants benefit, and the larger community, or rather the marketplace, also will see a fantastic uplift.
Fantastic. Thank you so much for those insights. So, gentlemen, I'd like to come back and talk about one of the biggest issues that seems to permeate technology in all its forms, and that's the gender gap. Yeah, only 18% of women work in the gig economy versus 82% of men. And rural penetration is at just 22%. How do we make these platforms more inclusive? And I'd like to start off with you, Dimmy. What specific initiatives is Bolt testing to boost female participation and rural driver onboarding based on these demographic findings?
Okay, thank you very much, Moses. So, as I mentioned earlier, I think we are the only top ride-hailing provider in the market that has a female-only category. So this is to attract female drivers now to feel safe and to feel connected on the platform. So once they join us, they have access to the female category. And now riders or passengers who want a female driver, they can access through that. So that one is we are creating a female category specifically for female, and that's attracting female on the platform. That's number one. But as I mentioned, we have a vehicle financing program, which we have financed over 4,000 vehicles today in the market. And this is not discriminatory. It's available for both female and male. So today, if there is a driver who is experienced enough but doesn't have a vehicle, and the female, they want a vehicle, whether it's a four-wheeler or two-wheeler, they're welcome to both. So we'll connect with our financing partners to get on board and start riding with us. But as well, we are continuously improving in terms of awareness, because we understand the female, by design, haven't been on ride hailing or haven't been participating in the gig economy for quite some time, right? So if you look at the data, 3 years ago, we didn't have female drivers, right? If you see now, we're talking about 45% of Bolt drivers being female. So it's a progress, slow, but now at least we're seeing some improvement. And if you think the underlying issue is, I think it's more of traditional. Driving naturally, especially commercial driving, has never been seen as the female's job. So I think if we go to traditional transport, such as matatus, you may not even find a single female driver, right? So if you go to truck driving, you may not find a single female truck driver. But now at least ride hailing is seen as now an intersect where even female can get to participate. So we are happy to be contributing on that, and at least even removing that scenario where I don't, you can, when you get on board, you can always be, you can meet either a female driver or a male driver. It's so common. So if you have used Bolt quite some time, you will tell that at least one of your, in 10 trips, you'll be lucky to get a female driver. And they're quite professional, same as men. Income disparity, there is no income disparity. In terms of the order dispatch, whether you're a male or a female, you'll get same number of orders depending on your availability. So it's an opportunity now to even female, I'd say, have a right way to even make money without whatever. And if you think about it, participants in the survey mentioned something about autonomy and even ability to even manage when I want to work, right? So this could be good for female as well, because maybe in the morning they are doing errands for their kids. So they can say, okay, I'll start working maybe from 10, then stop working at 4. So it can allow them to really get into the industry. So I think we are at the forefront of bringing more women in this space. And if there are some women out there who have been wondering, how can I get in the ride hailing space, they are very much welcome.
Oh, thank you so much for that. And indeed, I remember a few years ago when you'd get a Bolt coming and there was a lady, it was almost like a pleasant surprise. More and more now I feel there are more instances where the person driving would happen to be a lady. So clearly there's been movement, but obviously there's opportunity for more going forward. I'd like to come back to you, Kenneth. And from a policy standpoint, what sort of incentives can we have that accelerate gender and geographic inclusion in the gig economy as per the report's demographic breakdowns?
I think when we look at that number, when we saw the 97% male, it's an uncomfortable situation, because we realize that there should be improvement. We should be moving forward, as Dimmy has highlighted all of those actions that we are taking. We're taking those actions as just as part of the ecosystem. The ecosystem is bigger than us, right? So, and this comes to where we talk about policy. How can we enhance policy to do this? Most of these challenges, why we have only 3% female in the sector in itself, these are barriers that are upstream to platforms. Vehicle finance, that's what Dimmy has talked about. We have social norms, where it was the question about women being in that space. We have challenges, perception of safety. If you look at each of those challenges, there is a policy angle to it. There is a policy angle to it. If it is access to finance, how do we work with the policymakers? How do we work with our governments to broaden that space? What we are doing is a drop in the ocean. With the support of policymakers, we can expand that. So when we're looking now at, and there's ongoing conversations about, reviewing, improving the regulations and improving the ecosystem, the anchor should include breaking that gender divide, or that disparity that we see, not only gender, we're talking about young, unemployed young people, or the urban rural dynamics where you have to, I mean, we're talking about EV now. How do you make sure that the EV is not a solution that is only for the urban centers? How do we localize it into rural areas, right? So all of these conversations should be having, I think I go back to what I said about a comprehensive framework that covers everything, and not only to talk about a single issue statement, right? So we have to broaden that conversation. I think that's a message that we take to our policymakers, and we understand that they are thinking about that, and we're ready to work with them on that.
Fantastic. Good to hear that from both. Mbugua, observing the digital economy patterns across Kenya and East Africa, how can platforms better serve women and underserved regions without compromising network density economics?
That's a great question. The other thing is that we tend to imagine that life happens in cities. And the truth is, anywhere you go in this country, something's happening. And the convenience that we want is not just a city thing. So the simple answer to that is more services, and probably now looking at hyperlocal sort of experiences. When you think about the gig economy, when you think about e-commerce doesn't quite work in maybe let me not say it doesn't work. Maybe not as prevalent in the rural area as it is in the city, as is ride-hailing. But there are other services that are much, much needed. So if you look at the long-tail opportunity, it means that you look at the long-tail opportunity and the different verticals for which there is demand, for which there is supply, but on the consumer side, people are looking for trust. And on the supplier side, in terms of the people providing the services, they're looking for distribution and visibility. If there's one thing technology enables us to do, is to drive both of those. If I go to Mombasa and I need a haircut, unless I call Moses and say, Moses, do you know any plugs in Mombasa? But if there's a platform that enables that to happen, I could just go in and say, I'm looking for a barber and I'm in Mombasa. Who's mobile? Who can come to my hotel? As opposed to me leaving, who can come, for example, if you're in Diani, who can come to, I'm in Diani, I'm in this place, who can come to me? And I do not want to haggle about prices. That's one of the things about platforms. How much is a haircut? Kichwa and Ndevu, told 1,000 bob. Excellent. I agree. I'm not negotiating. The guy doesn't know me, but he trusts the platform. And I trust that the platform has verified him to the point that they are a quality person. Does that qualify for gig economy? I think it does. Can that work in Kisumu? Yes. Can it work in Wajir? Yes. If you need braids or locks done and you're out in Wajir, what do the ladies do? Right now, they laugh because they're like, Nikona growth, right? And no one can sort out my growth. But with the platforms or in the gig economy, you can actually enable that. Is it viable? We'll let the finance people figure it out. But from a technology perspective, from an inclusion perspective, it is. And there are many, many services that are possible. I wouldn't even start talking about plumbers, right? So, I mean, that space is massive. And if you just think about it differently, we've got lots of people coming out of TVETs, right? I happen to have had the privilege of engaging with one of the local banks, and they had I think it was a 10 billion shilling project, 5-year 10 billion shilling project to train youth through TVETs and what to skill them in very many of these things, whether it's mechanics, plumbing, painting, etc. All these are services that can be onboarded onto platforms for the gig economy. And I think we'll see these numbers dramatically change because suddenly there are some that are more gender-based. And as we grow that pool, we'll see the numbers grow. And like we said, suddenly the gig economy becomes the anchor income earner for the majority.
Fantastic. So at this point in time, I'd like to open the conversation to the media. We would like to take 2 or 3 concise questions, and you can direct this to any of the panelists sitting in front of you. So at this point in time, if there's any of you who would like to ask the panelists a question, please raise your hand and a microphone will be brought to you.
Good morning, everyone. Mona Juguna for Kenyans. I think the question goes to Dimmy and the rest of the panel. With the current legislation catching up with what is happening in the market and the changes that continue to take place, how is Void preparing itself for any changes in terms of policy? But also, is this a kind of policy you'd like to see either from the government or from the sector itself that helps improve our driver sector into the next stage of growth?
Okay, thank you very much. I would like my colleague, Kenneth, to answer that because he's our public policy director. But to give you a perspective, we are a key player in the industry and we keep engaging all stakeholders alike to ensure we move this industry together.
Thanks. And the question about how are we looking at the regulatory landscape? I know there's been talk about the reviewing the regulations and the areas of the regulations. And just to point out, we have been in the conversation from the beginning. So we are engaging the government. We are raising the concerns that we have about, and what I mentioned before, the idea and our view is how do you maintain and grow? We've talked about people, our drivers and the people in the community who operate on the platforms, the drivers who operate on the platforms and the couriers. The signaling from this research is this is our main source of income. Our livelihood has improved, 98%. We have some concerns, but we are happy with the sector in itself. We are committed to it. So when we are engaging government, that is the message we are taking. And as I said before, it's a comprehensive framework. It's not a single issue framework. So the message we pass is, let's not look at it on single issues because we will not solve it. We have to unpack all of them. The numbers that Dimmy has shared and the numbers that the research talked about earnings, what the drivers make and how their gross earnings and all of that. When we talk about net earnings, we start looking at the components that go into that gross earnings. And if you investigate further, as we talked about financing, access to financing, you talk about fuel pricing. These are exogenous factors which are not unique to the platforms. We don't determine fuel price. Geopolitics has determined it for us. How do we make sure that we create an enabling environment and it's a partnership? And so in terms of what we are looking forward to in these conversations about regulation, we're looking for an in-depth, comprehensive look. There is the concept about a socio-economic impact survey about how regulations will impact the whole ecosystem. And we've been working with the government to see how can we do that for this in our sector. So we have a holistic picture about the issue. So I will conclude by saying, moving away from single issue to comprehensive. And there's a lot of uncomprehensive that we have to unpack.
Hi, my name is Dan Mutema, and I have a question. We know that Kenya has been a leader in mobile money. And recently on 17th, that is the day before yesterday, there was the VASP bill, virtual assets bill that regulates stablecoin use and cryptocurrencies was released for public participation. So is Bolt willing to adopt this new kinds of payments? And what is your role with regards to this? Just your take.
Okay, thank you very much. So I'll start to say Bolt is a very innovative company. So when we onboard a payment method for both drivers or passengers, we onboard a payment method that's quite widely used by the people. So when we get at a level where most people, either passengers or drivers, are using the stablecoins, the crypto, whatever, then we'll be able to onboard them as a payment method. So I'd say we were the first one to issue the payment for all drivers via mobile money, because we realized most of the drivers that were joining Bolt were unbanked, the traditional banking ecosystem, right? So we were now able to onboard that payment method so that now drivers can be paid within their favorite mobile wallet. Similarly, we enabled riders payment or passenger payment via mobile money. We have card as well, and we have different ways. So we have what we call, for example, Bolt Business, where even now for companies don't necessarily need to give you money as an employee to book a Bolt every day. They can just sign up, get to use the Bolt service, then they get a quote at the end of the month to pay. So we're really innovative in a way. We can attract, but also we can accommodate any kind of big payment method that's available.
I would just add something, and interesting Dimmy's analysis about where the journey is going, right? When I talk to regulators and they ask about what is the vision for Bolt, and I'm like, if you look at the journey of the transformation that we brought into the market, I always say we democratize transport, and which is something which is overlooked at a lot of the times, right? We get so driven by the intricacies of the sector, but that concept and why that is important is that we are always adapting and innovating and disrupting in a positive manner approach. So the new payment options that are coming up, these are all being looked at. We're looking at it actively, how we can bring it and localize it, because it has to work in the local context. It has to work. And that is what we have. I mean, we started off by cash payments when we came in, and that was transformative. It meant that it was not just 15% who had credit card to use ride-hailing. It spread the ecosystem. The numbers that we're seeing on ride-hailing and the impact in the gig economy, we contributed to that by opening up that space. And so we will continue to adapt and be in the space as we move on. Just wanted to add that point.
I think that's a great question. And there is one component that people don't even think about. On one hand, you're grappling with how do you finance vehicles? And the one thing for crypto outside of blockchain, outside of payments, is real-world asset tokenization. You could imagine if we suddenly knew that the demand for, because the quality of the vehicle matters, right? We all agree that you want to ride in a safer, a better-looking vehicle. You've got people who are saying, I'm willing to drive 8 hours a day, but I borrowed my uncle's vehicle. He tells me I can only give it to you 4 hours a day. What if I could get my own? Who out here can help me get my own vehicle of whatever size? So if we look at that particular space and we look at the possibility of real-world asset tokenization, it then blows up the space exponentially. Why? Because suddenly you and I can participate and say, I know that my ride is costing 800 bob, but at the end of the day, I'm going to get something coming back to me as an investor. Now think about that for a second. I don't know how many unique riders Bolt has in Kenya. Let me put a figure. Let's say you have 5 million. All these 5 million people can actually be investors in the marketplace and in this ecosystem. And they could choose where to play. We're going towards EVs. EVs, we've been talking about substations that then enable our picky fellas to go farther, faster, etc. EVs are not necessarily, they're actually more expensive. Therefore, all the people in the ecosystem are looking for better financing options. That, for me, would be the aha moment where we're able to open up this space and say, everyone can then participate. And then you can say, drive the EV agenda, and at the end of the day, we all become investors in our own transport ecosystem, and we feel that much better using it. Because I know I'm using it and I paid 800 bob, but at the end of the day, or at the end of the month, at the end of the year, I get some sort of return with Bolt, for example, managing the ops, and I can continue doing my day-to-day job, but I know I have a stake in this sector. That would be massive.
Great. So I think we're literally at the end of our time. So I'd just like to maybe field one last question to our panelists. And given the context that by 2028, according to the report, we could see a rise of the workers to 300,000 from where we are today. So from that point of view, I'll start off maybe with you, Mbugua. One piece of advice to the gig workers, platforms, or policymakers based on this report, what would it be?
I'll steal some of Ken's light here and say, for me, it's still a policy conversation, because many times as gig participants, we fail to understand what it takes to actually deliver the technology that makes something work like magic. When technology works like magic, I request, it picks someone, they come, they actually get me to my destination, picks my payment. That magic has so much happening behind that we almost need to think a bit more deeply in terms of the unit economics and giving the enablers of any ecosystem their due. Because if we didn't have these platforms that remove the issue of haggling, bring the decency that I said, or the dignity to earn, we need to spare a thought for that layer and make sure that from a policy perspective, we're not just being populist. I say this again because we're going to an election year. You know, when you get to an election year, guys will come and say we can do ABCD in terms of policy. We need to think deeply about policy repercussions in the longer term.
Great. Kenneth, your parting shot?
Yeah, I would just reinforce that point about comprehensive framework that we need to, and especially I'm talking about that we're in the point of an election here. And we'll be talking, there's an ongoing conversation about regulations and how do you regulate the sector. The labor force is going to grow. It will keep on growing. A lot of it is going to the informal sector. Ride-hailing and the other gig economy have shown a capacity to absorb the side that the formal sector cannot. Let's not stifle it.
And you're speaking to the policymakers. Yes. And Dimmy, finally, your parting shot.
Yeah, thanks. So for me, I think we are looking to scaling, and we are by default in 2028, as mentioned, Bolt will be still the leading in terms of how we bring so many drivers on the platform, but also how do we make it easier for even drivers who don't afford to get on platform, be on platform. So with our vehicle financing, we plan to continue scaling that. So today, as I mentioned, we are financing anywhere between 8 to 9% of the vehicles in Nairobi. So by 2028, maybe we'll be anywhere between 20% or so. Then what I see, we moved from 0 to 4% of female now. So by 2028, probably we'll continue seeing more female coming on board. So by then, maybe the percentage would have been 8 or 10%. But also, I think we have made some serious progress. This is now as an industry. I think from safety, we have made some serious improvement as well. And I think we are going to continue making this work because we are working with so many partners, so many stakeholders. As we see the industry is really evolving, we are seeing the EV, of course, Bolt is the leading in terms of EV operation today. So we anticipate that by 2028 or 2030, there will be some changes. More EVs will be on the road, more drivers will be on the road. We are going to be actively participating in this economy by ensuring that people don't see ride-hailing as a part-time, but now think about it as a full-time income opportunity.
Great. So thank you so much, Dimmy, Kenneth, Mbugua. I think when we look at the hard data from our reports today, we can see that really this gig economy is driving over 100 billion shillings worth of economic impact. It's also a youth employment engine, as mentioned. My driver this morning from Bolt was actually a university student who's also essentially part of the gig economy because he uses his mornings to drop people. And we see that over 150,000 jobs are actually operating in this space. I think some of the key takeaways that we need to look at, number one, the element of flexibility, right? Different types of people are participating in this economy for different reasons, for different objectives. And many of them, their livelihoods are fundamentally linked to the gig economy, noting the 45,000 shilling monthly average that those who are participating are making. We also see that safety investments have been substantial where Bolt is concerned, essentially overlapping across all the different aspects of the business. And also you did mention up to 12% of your teams are actually just focused on safety. Of course, one of the issues we see is inclusion. The gender gap is still a problem, not to mention also the rule gap. We see that there are going to be initiatives and sort of various things that you've already done, such as creating the women-only related aspect of your product. And then lastly, the platforms, regulators, and gig workers must co-build the next 300,000 jobs that are going to come out by 2028. So thank you so much, Bolt, Ipsos, our media partners here today for this engaging conversation and participation. And the future of a fair platform work starts with conversations like this. Let's continue to have them. Thank you so much.